So I took a couple of months to understudy one of the most successful investors of our time who has built significant wealth over the last 8 decades. And that person is Warren Buffett, which I believe you might know. So Warren, having built a fortune from several investments, including establishing a multi-million-dollar company, has shared a lot of investment lessons that have become very valuable to my investment journey, including my overall investment decisions till date. In this video, I'll be explaining and sharing 6 key lessons I learned from Warren Buffett, which I believe will also be valuable to you, your investment journey, and your path to financial freedom. So if you're actually serious about investment and building wealth over the years, then you should definitely watch till the end. Hi everyone, this is Ebuka and this is the Finance Wiz channel. For those on this channel for the first time, Finance Wiz focuses on topics around income generation, savings and investment, debt management, and overall financial freedom. As such, if you find these topics very important to you, please ensure to like, share, and subscribe so you don't miss subsequent videos where I'll be sharing even more gems than what you're going to get from this video. Now, for the sake of those that don't know who Warren Buffett is, he's currently the chairman and CEO of Berkshire Hathaway, which is an American multinational conglomerate holding company with its headquarters in Nebraska, United States. Now, Warren started investing at the age of 11 years and has since grown his investments significantly, taking him to a current net worth of $117 billion today, which has made him the 5th richest in the world. Now, here are the 6 lessons I learned from Warren Buffett. Now, Warren believes that a significant risk will emanate from a business you typically don't have a good understanding of. In his words, he says, never invest in a business you don't have a good understanding of. Now, over my years of experience, I've seen several investors that jump into investment products or initiatives without truly understanding what it entails. Many people typically jump on trends, hypes, frenzies, and in worst cases, the desire to make quick money. For instance, I've seen people jump into things like day trading, cryptocurrency analysis, and even multi-level marketing without truly understanding how it works or its mode of operation. Now, Warren did not just say this, but he also lived it in his business and activities. For example, Warren ensured that his investment business, Berkshire Hathaway, did not invest in technology stocks because he simply admitted that he did not understand how to value them properly. It was only until 2016 when he gained an understanding of how Apple works and its base of operations that he decided to acquire a stake in the business. If you're wondering how to analyze how a stock is performing and how to understand the business, I've tagged a video here which you can watch that can guide you on how to perform a DIY analysis of a stock's performance. Now, the second lesson from Warren Buffett is that he believes that a low-cost index fund is the best form of investment for majority of investors. He specifically believes that you don't actually have to be a stock picking genius for your money to grow effectively in the stock market. In fact, if you're a long-term investor, you will gain the most when you go with a simpler strategy like low-cost index funds. He typically recommends low-cost index funds like the S&P 500 index funds because of its low expense ratio. Now, you can invest in index funds through many ways, such as opening a brokerage account, using your retirement savings account, or even going through a mutual fund provider. So, to help you better, I've actually tagged a video I did on index funds and how you can run those kind of investments. Now, whichever approach you choose to go for, I'd recommend that you don't wait till you have a large chunk of funds to invest before you start investing. In fact, Warren recommends adopting a strategy called the dollar cost averaging strategy, which simply requires that you invest a specified amount over an extended period of time. For instance, $100, $50, $30, or $200 on a consistent basis over a period of time. So the third lesson from Warren Buffett is that he believes that it's better to invest in companies with high self-intrinsic value, irrespective of their current financial condition or situation. Now, Warren learned from his experiences from making poor investment decisions. He specifically learned that a business may appear inexpensive, however, this does not imply that the business or investment will be profitable. Now, when a business reflects high profitability and consistent, clear competitive advantage, there's a high probability that this trend will continue to persist into the long term. And of course, this creates an opportunity for the business to invest its profits, compound its interests, and with the help of compounding interest, the growth of your investment becomes even more predictable. As such, I would recommend that you invest in high quality businesses at reasonable prices and then hold them for the long term. The fourth lesson I learned from Warren Buffett is the fact that time is super crucial to an investor. Now, this is where the power of compounding interest comes into play. In other words, time in the market beats and will always beat timing the market. Now, think about it. A business that typically sets a great structure or system will over time grow and be more sustainable, while mediocre companies will usually not stand the test of time. Now, Warren has actually applied this in his business investment strategy by monitoring businesses over a long period of time, say 10, 15, 25 years, and even longer. Now, if you look at my previous videos, I typically talk about earnings over a period of time, say 10 years or longer. And I know it's fair to say that you cannot predict the future. However, you can use the historical past to make assumptions for the future. So my fifth lesson from Warren is, if you don't find a way to make money while you sleep, then you will work until you die. Now, Warren understands clearly the power of leverage and the fact that everyone has a limit of the time you can work for, say 12 to 24 hours max in a day. Now, ask yourself the question, if you are relying solely on the number of hours you work, what if you fall sick? Does that mean that your income source will drop? Well, Warren believes that you should not give your everyday time to be able to earn income. In other words, make money work for you. Overall, this is what I call the concept of passive income. So you can easily earn passive income from dividend stocks or exchange traded funds or mutual funds. So I've tagged some videos here where I talked about my top dividend stock picks. You should check them out and I'm sure you find them very valuable. So my sixth and last lesson, according to Warren, is that it is insane to risk what you have and need in order to obtain what you don't need. Pretty straightforward, right? Well, let me break it down for you. Warren is completely against the idea of borrowing to buy stock or even speculation in its entirety. He strongly believes in the idea of long-term investments and over time growth. Now, it's very important for you to differentiate between investments and speculations. Now, most times, speculation is highly risk aggressive and could lead to loss of funds which could have been better used for investment purposes. This might lead you to abandoning investments as a whole. Now, when you borrow for the purpose of investments, you're pretty much banking on the possibility of the spread increase, which can lead to loss of all your entire funds. So it's important for you to remember that the stock market can swing in any direction in the short term, even for the most reliable stocks. Now, when you lose your money because you are more short-term oriented, this could lead to you being unable to pay back all of those borrowings. And of course, this might leave you broke. Warren, although being one of the richest men today, believes that there is no secret formula for getting rich today. However, he believes that it requires a lot of patience, discipline, and very, very good investment decisions. That way, you are able to compound your investment into the future for long-term growth. Well, those are all the tips I had to share with you, and I hope you found them really helpful for your investment decisions. So I'm actually interested to know how you have applied these tips, if you have already applied them, or how you intend to apply them going forward. Feel free to drop your opinions or thoughts about this in the comment section because I'm curious to see what they look like. Also, feel free to let me know what topics you want me to talk about in the comment section below. Finally, don't forget to like, share, and subscribe to this channel so you don't miss out on any of subsequent videos. And most importantly, click on the notification bells so you are notified whenever I drop a new video. Have a great day and bye.